Imagine this, you open your portfolio 10 years from now. And instead of chaos, fear, and panic, you see calm growth. No gambling. No hype. Just quiet compounding that built real freedom while everyone else was chasing headlines. Because that's what most people never learn. Wealth isn't built in the next 10 days, it's built in the next 10 years. In today's video, I'm not giving you hot tips. I'm giving you the 2025 Long-Term Playbook, the same framework used by investors who sleep well through crashes, corrections, and even recessions. We're talking about a portfolio that doesn't rely on luck, but on structure. A mix of timeless companies, smart ETFs, and the discipline that quietly beats 90% of traders over time. See, in America and Canada, we love stories about quick wins, crypto rockets, meme stocks, AI coins that print money overnight. But here's the real story, the wealthiest people didn't chase volatility, they owned quality. They bought companies that kept growing when others panicked. They didn't sell when the market dipped 20%, they bought more. And that's exactly what this playbook is about. So if you've ever asked yourself, what should I buy now that I'll still be proud of owning in 2035? You're in the right place. Let's rewind for a second. Every investor starts with confusion. You open your first brokerage account, scroll through 1,000 tickers, and think, how the hell do people know what to pick? But then, you discover something powerful. You realize you don't need 100 stocks. You need structure. 3 core layers: foundation, quality, and edge. Let's start with the foundation, because without it, everything else collapses. In the US, this means VTI or VU. They're not boring. They're beautiful. They represent America itself. Tech, healthcare, manufacturing, finance, energy, all blended into one low-cost, unstoppable machine of capitalism. In Canada, that same role is played by XIU-2 or XIC-2. It's like holding the country's heartbeat: banks, energy, utilities, telecom, steady, proven, and global. This is your engine. It doesn't scream. It just moves. And over time, it's the quietest part of your portfolio that makes the loudest impact. Now layer 2, the dividend quality. Here's where you bring discipline into your portfolio. Because when markets fall, and your brain screams, sell, your dividends whisper back, stay. For US investors, the king here is SCHD, the Charles Schwab Dividend ETF. It's like owning a basket of America's most responsible adults, companies that actually make money, pay investors, and still grow. For Canadians, it's VDY. 2. Solid, reliable, and perfect for keeping your cash flow alive during volatility. Dividends are your anchor. They don't just give you income, they keep you emotionally grounded. Because when your portfolio pays you every quarter, you stop reacting and start investing. And finally, the edge, the world-class compounders. These are the companies that don't just grow, they transform industries. Think Microsoft, turning every company into a subscription business. Google, dominating search, AI, and cloud. Costco, growing quietly with loyalty stronger than any marketing campaign. Broadcom, AVGO, building the chips and connectivity that power our digital economy. These aren't hype stocks. They're wealth factories. And the crazy part? You don't need to find the next Microsoft, you just need to own the real one. Because the secret most traders never understand is this: repetition compounds faster than reinvention. While they keep jumping from trend to trend, you keep feeding your proven winners. That's how fortunes are built quietly, decade after decade. So before we even go deeper into allocations and growth layers, I want you to remember this sentence. It's not about timing the market, it's about time in the market. That single truth has made more millionaires than any trading strategy in history. And in the next section, I'll show you how to actually apply it. How to build your long-term structure step by step. How much to allocate. And how to sleep peacefully even when markets crash. Because trust me, 2025 will bring volatility. But volatility is not your enemy. It's your ticket, if you know how to use it. Here's how it starts. Every long-term investor has to answer one simple question. What am I actually building? Because if you don't know the architecture of your wealth, you'll end up rebuilding it every year. This playbook fixes that. Your foundation, your dividend layer, and your compounders form a structure that works across all economic seasons. It's not built for luck, it's built for survival. Let's begin with the core. If you buy VTI or VOO in the US, or XIU, XIC in Canada, you're already holding hundreds of companies. That's instant diversification, the modern equivalent of owning America or Canada's entire productivity. When you buy that, you're not betting on one CEO, one trend, or one quarter. You're betting on human progress itself. And when progress wins, you win. Now let's add discipline, the dividend layer. This part is emotional medicine. During the chaos of 2020, 2022, and even the flash drops of 2023, do you know who slept best? The investors who owned SCHD or VDY. Because even when prices fell, their portfolios paid them back, quietly, consistently, almost stubbornly. That's the magic of dividends. They pay you to stay invested. They remind you that patience is profitable. And they compound not only in your balance sheet, but in your mindset. Then comes the engine of growth, the compounders. Every decade has its titans. The 1980s had Coca-Cola, the 1990s had Microsoft, the 2000s had Google and Amazon, and now we have companies like Microsoft, Google, Costco, Broadcom, Eli Lilly, and Novo Nordisk leading the charge. These aren't lottery tickets, they're machines of consistent innovation. Microsoft doesn't just sell software anymore, it sells infrastructure for the AI revolution. Google isn't just search, it's the nervous system of the internet. Costco doesn't advertise, its customers do that for free, because loyalty is priceless. Broadcom quietly profits every time your phone connects, your car drives, or your cloud runs. And Eli Lilly and Novo Nordisk? They've rewritten the future of health, from diabetes to longevity itself. These are the types of companies that compound predictably. And predictability, over 10 years, beats volatility every single time. But here's where most investors fail: they don't build around behavior. They build around excitement. They say, "I'll buy when it feels good, and sell when it doesn't." That's not investing, that's reacting. And reaction kills compounding. So the first rule of this 2025 playbook is simple. Automate your consistency. Set a monthly DCA, a fixed amount that buys no matter what the headlines scream. Bull market, bear market, election chaos, buy anyway. Because the price doesn't matter nearly as much as your habit. Over a lifetime, discipline crushes timing. The second rule: diversify by function, not by feeling. Don't own 10 tech stocks and call it diversification. Own different functions: technology that grows, healthcare that protects, infrastructure that stabilizes, and dividends that anchor. That's what we mean by layers, not noise, but purpose. Third rule: rebalance without emotion. Once a year, look at your portfolio. If one layer grew too big, trim it slightly and add to the weaker side. That single act keeps your risk under control without killing your momentum. Now, let's talk about something most YouTubers never explain: the psychology of long-term investing. Because truthfully, money is 20% numbers and 80% behavior. The reason this playbook works isn't just math, it's emotion proofing. When you've got a structure, volatility stops feeling like danger, it starts feeling like opportunity. Because you know why you own what you own. And let me tell you a story. In 2008, during the financial crisis, an investor named Tom kept buying every month. People called him crazy. His friends were liquidating everything, the market was down 50%. He kept adding to VU and SCHD. 15 years later, he didn't just recover, he tripled his net worth. He wasn't a genius. He was consistent. That's the secret no one wants to hear. The boring, methodical, emotionless approach is what actually wins. Every single decade. So when you hear the noise of 2025, AI bubble this, market crash that, remember this sentence. Real investors don't predict, they prepare. And this playbook is your preparation. Your shield against panic. Your map towards steady, realistic wealth. In a moment, I'll show you the actual structure you can model right now. Beginner, intermediate, and advanced. Each one built for the US and Canadian markets. each tested by decades of market storms. And trust me, when you see how simple it is, you'll realize, the hardest part of wealth is not complexity, it's patience. Alright, let's build your structure, right now. We'll keep it simple, timeless, and powerful. If you're a beginner, your goal isn't to predict winners. Your goal is to build rhythm. Start with 60% in the broad market core, VTI or VOO in the US, XIU, XIC if you're in Canada. Add 20% in SCHD or VDY for dividends. Then use the last 20% for quality compounders like MSFT, Google, Cost, or AVGO. Reinvest every dividend. Forget the news. You're not building a week, you're building a decade. If you're intermediate, increase sophistication. Go 45% core, 20% dividend, 20% compounders, 10% health and longevity, LLY, NVO, 5% infrastructure, NA or BEP. You now have exposure to everything that grows, pays, heals, and sustains. That's a full economy in one portfolio. And if you're advanced, trim risk, sharpen focus. 35% core, 15% dividend, 25% compounders, 10% health, 10% infra, 5% SPICE. That's your high conviction growth edge, TSM or SMCI. You don't need more. Because power doesn't come from adding things. It comes from knowing why each thing is there. This is how real investors think. They don't chase 100 tickers, they curate 10 pillars. Each one has a job, one gives growth, one pays cash flow, one stabilizes, one hedges inflation. Now you may ask, what about the crashes? What if 2025 is the year everything breaks? Good question. Here's the truth, it will break, temporarily. Markets always do. But the people who build portfolios like this don't need to predict when. They already prepared before it happens. When the market drops 20%, they buy more. When headlines scream, recession, they reinvest dividends. Because the wealthy don't see dips, they see discounts. There's a line I love. Volatility is the price you pay for returns, and the rent you pay for freedom. If you can emotionally afford volatility, you'll financially afford everything else. Let's get even deeper. Why does this work so reliably? Because every component compounds differently, and together, they form an ecosystem. Your core ETFs capture global productivity. Your dividend ETFs create stability and cash flow. Your compounders amplify innovation. Your health stocks monetize longevity. Your infrastructure protects against inflation. And your SPICE keeps your portfolio alive with progress. It's the same way a forest stays alive, diversity sustains growth. Now, if you've ever felt behind in investing, here's the truth that Wall Street rarely tells you. You're not late. You're just early for your own timeline. Because compounding doesn't care when you start, it cares that you don't stop. Maybe you didn't invest at 18. Maybe you started at 30 or 40 or 50. It doesn't matter. 10 years of consistent DCA beats 10 years of waiting for the perfect moment. You don't have to predict the next Apple. You just have to keep owning America. Keep owning Canada. Keep owning innovation, discipline, and patience. Because here's the ultimate paradox. The slower you try to get rich, the faster you actually do. And that's the beauty of this 2025 playbook. It's not exciting every day, but it's rewarding every year. It doesn't make you rich overnight, but it makes you unshakable over time. Let me share a story. In 2013, a quiet Canadian investor named Lena started buying XIC and VDY every month. She ignored the news. She never timed the market. A decade later, her portfolio's up nearly 160%, not counting the dividends she reinvested. She never beat the market. She joined it, and it paid her back every day she stayed. That's the mindset I want you to have. No fear, no hype, just consistency. And if you're wondering, when do I sell? Here's your answer. Sell when your goals change, not when your feelings do. Because your emotions will change every week. Your goals, freedom, peace, security, stay the same. So let's visualize it. You wake up 10 years from now. Your dividends are covering your bills. Your portfolio is twice as large as when you started. And you're not refreshing charts, you're living life. That's what this is about. Money isn't meant to control you. It's meant to quietly serve you. This is not financial advice, it's financial perspective. Because the best thing you can do for your future isn't guessing what stock will double next month. It's committing to the system that doubles your future. So whether you're in New York or Toronto, Calgary or Chicago, remember, don't chase luck. Build structure. Let time do the heavy lifting. This is your 2025 long-term playbook. And the best day to start was yesterday. The second best day is today. If you found value in this video, hit subscribe so you never miss the monthly updates. We break down real portfolios, compare US and Canadian allocations, and show how compounding quietly turns years into wealth.